Hello everyone, this is Marvin from StockMarketPlan.com with your March 10th, 2011 Stock Market Watch. Okay guys, there it is. Market S&P 500, looking at the spiders here, the SPY, finally closed underneath that 50-day moving average, confirming that these heavy distribution days, I talked about, this volume pattern earlier in the past 2 weeks or so that, much of this the market couldn't take for a very long time. It will eventually weigh on the market, and sure enough, this is the line that I had drawn before. Let me extend that to the right, and again, test, test, and then here's a squeezing that I talked about. You see how this 50-day and this top line squeezing it, and finally we got a breakthrough today, and it was to the downside. So this move today, the market closed at I see it here. 129.94 is what I see it on official here, and the 50-day moving average is 130.22. So we closed well below it, and a lot of volume came in as well. Okay, during the session, a lot of unrest and overseas with we've got police over there now shooting people for protesting. So. Which I don't know if they shot people, but there were shots fired. So pretty serious stuff over there. That situation over there is not improving. If you want an excuse, there you go. There's many others. But frankly, I don't need excuses. It is what it is. We've been watching this, and we pretty much called it to the T. I mean, here it is, consolidation, and then finally, I spoke that we would either get it today, Friday, or early next week, and we've already started to get it here. So this brings on a whole new set of rules. The market now has turned into a correction for me, a correction mode, bear market, near-term bear market, near-term correction, near-term whatever you want to call it, but it's basically a negative. It's taken a negative tone. The market has taken a negative tone now because of this confirmation here, the price closing below the 50-day moving average. Earlier on in earlier casts, I talked about that there were certain areas that were already doing this exercise here. I know that the Nasdaq is also below the 50 today. Let me show you what that looks like on the Nasdaq 100, the symbol QQ. Here is the Nasdaq, and again, there's your 50, and it had tested multiple times, but you see the test, and then it closed above it. The body is above it. That little string is a little test down there, but it closed above it every session except again for today, and volume came in heavy. So these are the things that I watch. Next level of support on the Nasdaq is way down here. I think we definitely test that area again, and that's this little base that we saw here. This was another consolidation phase here before we ended the year last year. So that's where I see next resistance there. On the S&P 500, looking at the spiders again. On the spiders, it's a little bit more, it's a little difficult because, I mean, this is the 200-day, and that would definitely be a solid play, but I mean, there's a lot of percentage loss there. I think right here, there's a little bit of a base here that we can see some type of support there. Yeah, right in here somewhere we can see some type of support maybe. But I mean, this is the problem with markets that go parabolic like this, which just go straight up. Okay, is that there is no consolidation, and I spoke earlier about consolidation being productive. This is why, because consolidation also builds support levels, and it was where there was a fight here. Okay, there was a fight and the bulls won. Okay, there was a fight here and the bears are now definitely taking a toll on the bulls. So now it's the same thing. As this market starts to come up, now it's going to hit all of this resistance up here. Okay guys, so there you have it. Let me zoom back in here. That's what we've got going on right now. We're in no man's land right now, so really it just all depends here. We'll probably get a bounce here tomorrow or the next day, and probably start hitting this and start either trending. Hopefully it'll be this is the danger, because if it's a slow trickle, okay, and I'll talk to you more about that as we get in, into this correction a little bit further. But if it's a slow trickle, you're going to get a lot of the people out there saying, hey, you know what, I know the market's down, but it's a perfect opportunity to buy some more. And that's how people got seriously hurt during people get seriously hurt during any correction. Why don't you just come out of the market and buy it all down here, or further down? I mean, there's no reason to hold stock especially when you enter a correctional period. So for now, I'm in correction mode right now, bear mode. Definitely not establishing new positions, and if anything, playing defense right now and looking for opportunities as we bounce back into these levels here, and watching how the bounce back happens. And we'll get into that as it happens. And seeing how it bounces back the market, and then making decisions of whether to move more into cash or not. So definitely tomorrow I'll probably be moving at least 25% of my holdings to cash and start playing some defense. Cash is a position. That's the first thing. If anything, if there's one thing that I believe so much that it's not preached in Wall Street enough, cash is a position. And if you don't believe that, go back to the technology bubble, go back to the real estate bubble, and anybody out there, challenge anyone to tell me that it was worth hanging on to your holdings all the way down 50-60% when you could have gotten out near the top and then gotten back in at a much cheaper levels. I mean, it's just I don't understand it. It's just that simple. Anyways, we're gonna keep a close eye on this thing, and definitely entered correction mode today, guys. There it is. There's my confirmation. See how we go going forward. We'll look for that. We'll look for the slow bounce trickle, or maybe we'll get a sharp move down, or maybe even up a little bit. But we'll be watching it. We'll be watching. Right now, there's a lot of work to do for this market. This market has a lot of work to do right now, and I think I mentioned that way back here also. So I mean, nothing changes. If anything, it just gets more bearish for me. All right, guys. Again, this is Marvin from StockMarketPlan.com. I invite you to check me out on Facebook and on Twitter. You can also, when you go to StockMarketPlan.com, you can subscribe to an email. Unfortunately, you don't get it to the next day, but at least you get it, and you can view it. Being these market casts, being late 1 or 2 or 3 days even, it's not going to hurt you. We're looking at things long term here, and this is just a start again of a bearish phase. I don't know how long it lasts, but we'll just have to wait and see. Again, Marvin from StockMarketPlan.com, and we'll talk to you tomorrow, guys. Bye bye.